We've got an expert in what's going on in iron ore. He is the chief executive of Cliffs Natural Resources, Joe Carrabba. Joe, good to have you with us.
Thanks, Pimm. Glad to be here.
To Bloomberg in this setting of the BMO Capital Markets Conference. So when you talk to people around here, I mean,
right.
did they ask you about what's happening with metallurgical coal? This is the coal that's
right.
used to make steel.
That's right. That goes into the coking process to make all the steel for the blast furnaces. It's in very tight supply. There's only a few basins in the world that actually produce met coal as it comes in, and it looks like it's really becoming the choke point, if you will, for steel manufacturing for the future. The places where iron ore is rich and steel companies are going, such as Brazil and India, have little, if any, met coal. And it really bodes well for the met coal market.
All right, tell me a little bit about pricing. Any hint on the pricing per metric ton? Like, I've heard this number around today, $240.
There's a lot of numbers going around. There's a little bit of confusion in the market without a benchmark setting price with the Japanese steel mills. It's been traditional with BHP, and I think everybody's just trying to find their way through. But prices are certainly heading up into those ranges as we sit here today.
All right, now when you do negotiations, I know you don't do them on television or on radio, but I mean, are we going to end up with like quarterly prices? Are we going to end up with something that is less than an annual price?
I think people always look for the finite answer, and I think it'll be a mixed bag. We have customers that are smaller, don't have a lot of cash, can't take the volatility. They still want fixed pricing. We have customers that will want to go pure spot, and some will go index. So I think for the next few years, as the pricing regime settles out, you're going to get a little bit of everything, and you have to adapt to what the customer needs.
Let's do iron ore now, right? All right, so what's the demand out there? Still strong?
Everything is strong. In North America, pellets are short throughout the marketplace, both in North America and around the world, for what we export out of our Wallbush mine in Canada. That we just purchased the majority share. North America, people are also really starting to scrape up the excess pellets coming on the ground. China is still the story for Australia and Brazilian ores. We were sold out last year in a down year out of our operations in Western Australia, and everything looks to be going at the same pace this year. So it's the supply side is extremely short.
What about expansion? What plans have you got?
Well, we've done a lot of organic growth. We've mopped up a lot of our minority partners in the last few years.
Yeah, you're the leader in iron in pellets, right?
That's right. Yes,
you're the
North
leader
America, we are the market maker in North America when it comes to pellets. We've expanded our old Portman assets in Western Australia from 6 to 8.5 million tons, and we continue to work on our Amapaw joint venture with Anglo and get that up into a 5 million ton capacity. So a number of things going on within the company.
Now, when you look at this demand, you mentioned China. Any concerns that it is all? I mean, I ask everybody: is it being driven by stimulus? Because you know what stimulus giveth, they can also take it away.
Well, that's sure. I think there's some stimulus, but it's also about infrastructure. We've targeted our iron ore products into the steel mills that make long products. That is, products for the infrastructure. We could look at flat products that are going into manufactured goods into the export market, but we still find a very robust market. I mean, 14.5 million cars that were produced in China last year, those cars have to drive on something, and they need bridges, and they need steel to put into the reinforcement of everything so that the cars can continue to roll. So we're very strong on infrastructure more than stimulus.
Tell me about the infrastructure in the company in terms of costs right now. How are you managing to deal with cost issues, particularly at some of the mines?
We've had a very strong business improvement process for about 3 years. We brought it in the good times. You don't do it in a crisis time. Very big on Lean Sigma. We've got our own Six Sigma group within the organization, very strong on procurement activities around the world, and we've really worked very hard to separate an independent group of people with a lot of skills when it comes to managing cost and debottlenecking processes.
So of cost per ton, have they come down?
They have. Our folks did a wonderful job in 2009. They broke every record that I thought they possibly could, and we're going to fight very hard to maintain that cost profile as things go back up.
Now, one of the things you can't control, of course, is foreign exchange rates.
That's right.
That was a headwind for you in Asia Pacific, right?
Yes.
So what's the story right now?
It's always a mix. I mean, certainly we're getting some damage from the FX right now, but that also is probably what's going to help drive the next price increase to overcome and even break even on foreign exchange. So we think that'll help the pricing, and that'll cure all ills as we go forward.
Now, in terms of just spending some of the money that you are making, Free West Resources,
right?
Tell us about that.
Well, it's a chromite deposit that we've just purchased from a great little exploration company up in Canada in northern Ontario. We think
what do you use chromite for? I mean, it sounds strategic. It sounds, like one of these amazing metals.
Well, it is, and it's most of the world's supply comes from South Africa and Kazakhstan. It's used primarily in stainless steel,
right,
which goes into a lot of our chemical processes and a lot of our strategic defense programs and things of that nature. We think being in a AAA country like Canada, in a mining-friendly province like Ontario, sitting on top of the North American market, bodes well for the future, and this is a great deposit.
All right, I want to thank you very much, Joe Carrabba, coming in, the Chief Executive of Cliffs Natural Resources. Keep us up to date on any of these other strategic metals you're going to be buying, like chromite. I'd just like to be able to say it. Thank you very much.
Thanks, Pimm.
Appreciate you for coming into Bloomberg.